this is the growth fear. Is that what we're seeing here? Is that what is happening in terms of the narrative? Crude is lower. Are we just extrapolating the tariff story into a slower growth story into the crude price?
I think one thing that the market is looking at is probably China specifically. They're the world's biggest crude importer, and when you see tariffs on top of previous tariffs of 50–60%, that's going to take a hit on the Chinese economy. That's going to take a hit on their energy demand. Now, more broadly, if there is a trade war, if there are retaliatory tariffs from other countries, you see them also potentially consuming less. I think one of the outliers, look at U.S. gasoline demand. That shows that, or rather, U.S. gasoline prices. Lower prices indicates that the market thinks that the U.S. Will consume less. The economy will contract, and that's playing out in the mind of the traders as they see Trump roll out these tariffs. So overall, while energy was exempt actually from these tariffs, energy imports into the United States weren't touched, it does still show that the wider economic impact, the market, at least oil traders, are expecting a slowdown in demand, and I think in particular that of China.
Well, Stephen, speaking of China, when we're already seeing kind of headlined across the wire and across the Bloomberg terminal around the idea that oil traders are avoiding China-made ships. That was something that was mentioned when Donald Trump talked about China. I think he very specifically said one Chinese shipyard is able to make more than all of the American shipyards. He very specifically made that reference. Talk to us about how that dynamic, among others, impacts the oil market moving forward.
Well, I mean, I think the one thing that you have to focus on with that is that it could change the flow of where exports come from, where you're picking up your crude and where you're traveling. I do actually want to focus on liquefied natural gas in particular, because that might actually be one of the larger impacts. Citi had an interesting note overnight illustrating that potentially this could add the cost for exporting LNG from the United States. The U.S. is the world's biggest LNG exporter, and if this becomes a costly sort of gambit, if this becomes an issue, then that could actually force some buyers, some traders, to look elsewhere for their LNG. This could essentially reduce what they call the ARB for American gas. It's one of these unforeseen circumstances or sort of hits to the U.S. energy sector that they probably weren't thinking about when they decided to implement this sort of policy. But it's one of the areas that could be sort of an issue going forward. So I think that's one area in particular that you should keep an eye on, is the impact that this has for LNG exports, especially the cost of getting it out of the United States, and what happens with trade partners. Are they going to look elsewhere, or are energy companies going to stick with it and just take that hit and pass that cost on to consumers?
Yeah, it's interesting, and Guy was just, as you were speaking, Guy was just noting the weakness in the dollar as well, and of course that's important when you talk about global trade of commodities. Thinking about that some more then, we've got gold prices actually a little bit weaker today, but we saw gold hit a new all-time high as a result of what, market nervousness, tension, risk haven seeking, I suppose. What are you hearing about the gold price, Stephen?
Yeah, I mean, it's been on an absolute tear over the last several months, and it keeps rising higher. And I think it sort of plays to, as you were saying, that safe haven aspect. Going forward, we could see more upside. I think as the world kind of rolls out these tariffs against the United States, the EU has said that they could enact something. China has also said that they could enact something. You're going to see perhaps more of a flight to gold and other safe haven assets going forward. Silver has also been pretty punchy. Now, I think it also depends on how long the market expects this to go forward. You know, I've been talking to traders today who are bringing up the idea that, you know, these tariffs are going to go into effect this weekend, and then the ones on top of it, the larger tariffs, going into effect next week. There are some who actually expect that this might not follow through, that that this could be Trump bluffing. Now, whether or not you want to talk about the validity of guessing Trump's moves and predicting what he's going to do, I think if this does move forward, you could see more of a sort of hastening or more of a push into gold and seeing prices continue that record-breaking streak over the next several weeks and months.